Hey there, everybody. Thomas Wood with Basecamp Trading. It is Friday, May 5th, Cinco de Mayo. So today we're going to continue on with the price action series, and we're going to talk about intraday channel breakouts. And these are a few trades, or I shouldn't say a few, a couple trades from the trading room today that worked out really well. Now today was non-farm payroll day, and this is one of the markets we were trading. This is bonds, and this is on a 500 tick chart. Now, non-farm payroll came out right here. You can see when we got really volatile for a very short period of time right off the bat when that announcement hit at 8:30 this morning. Now, when we trade non-farm payroll, we don't mess with that. We don't try to jump in and catch that initial breakout or anything like that. We are patient and we wait for the market to kind of settle down, and then we pick a direction, and then we continue on with finding our actual entries. So what happened here is bonds broke out, they started chopping, they started to climb, all right, and they started moving higher. And then what happened right at the top here, we ended up forming a double top with a bearish divergence. Now the bearish divergence occurs using the momentum indicator. This is the MQ momentum indicator. You can see we have lower high, weaker momentum between the two peaks. Even though prices are equally high, momentum is significantly weaker on both the indicator line and the histogram. Plus, our downside momentum is increasing. So the histograms to the downside are getting stronger compared to the last set. Histograms to the upside are getting weaker compared to the last set. So we have strengthening downside swings, weakening upside swings. So it tells us it's losing strength. Now the entry on the trade is the break of the middle of that M pattern, or what we call a little channel here. We have resistance, then support from the pivot low at 52 and 2/30 seconds. You break through that, and then we start to accelerate lower. Now you have two options on stop placement, okay? You can either A, place your stop above the previous bar's high, which in this case would have been about 5 or 6 ticks. It's a little more than what I typically want to do with bonds. So if that's too much, then what you do is you either B, look for a bear flag, which would have happened right here, or C, you place your stop just a couple ticks above the support that you got in on. So we broke through that support at 2, so we place our stop at 4. That means you're selling from 1 or 52 even, and you have about a 3 or 4 tick stop loss. All right. Then we accelerate lower. Now, when we hit our first target, we do not close the trade. We say first target's hit. So now what does that mean? It does not mean get out of the trade right away. We want to allow that trade to continue to run if it can, or if it's going to. So what that means is start trailing your stop behind the previous bar's high. Okay, so you trail it behind the previous bar's high, you run it all the way down. And again, if you're in the trading room, I'm walking you through all this as this is happening. And that means you're exiting right around here at about 24-30 seconds. So not a bad, you make about 7 to 9 ticks depending on entry. Not a bad return. Then what happens, we retrace back up. So you're flat now. We retrace back up. We run back into previously broken support, now as resistance at 52 and 2/30 seconds. We come down, bounce up, come down again, bounce up, and now we have 2 pivot lows. We're at the exact same point at 151 and 26/30 seconds. So we create a new channel. And now we're going to say, okay, if we break through the resistance, it's a potential long. If we break through the support, it's another potential short. Now in this case, once more, look at our momentum between the two peaks. Peak number 1, peak number 2. We have weakening momentum yet again. And then we come down and we break through the support at 51.26 once more. Now we start moving lower. The first test is going to be right down here at 51 and 21. That means when we hit that, we trail down to a 1 bar trailing stop once again. We break through it, and you continue doing the 1 bar trailing stop all the way down, and you're getting out at 51 and 17. Because it comes down, hits the support here from the initial pivot low after non-farm payroll, and then starts to bounce back up. And those were the 2 bond trades today. We also had breakdowns in gold that we were watching and trading, and we were trading a pairs trade between the S&P and the Dow. Made money in that as well. We also closed out a pairs trade from yesterday that was between gold and platinum. It worked out really well also. So overall, pretty good day. We had bonds, gold, gold platinum pair, and S&P Dow pair, all doing excellent. So that's all I have for you for today, though. I hope it helps. Again, main thing to take out of this, once you hit your first target, don't do not necessarily just close your trade. Start trailing by 1 bar trailing stop so you allow it time to move. The other thing is make sure you look at your momentum going into these channel breakouts. Make sure you have weakening momentum if you're going short or strengthening momentum if you're going long. Alrighty, that's it for today. Don't forget to click the link on the bottom right hand side of the screen to subscribe. And on the left hand side, there are some other videos you can check out, all talking about price action trading. I will see you guys on Monday. Have a great weekend. Happy Cinco de Mayo. And until next time, happy trading.